Good evening. Welcome to WealthMills Securities Weekly Market Wrap. Uh, just to give an update on the markets, last week was a busy week in terms of the market. Stock markets are concerned because you all know one big day for stock market, that is everybody wait and see the policy information of Indian government towards the economy, towards the equity markets, that is budget day. Last Saturday, the finance minister presented budget of a Indian government in Indian Parliament, and looking at the budget presentation, markets were disappointed. You all know markets came down drastically, and all spectrum of the market, it's mid, small, and the large cap stocks, all stocks they drifted after the budget announcement. But everybody anticipating, because the budget was presented on Saturday, that is last Saturday. On Monday, everybody was anticipating the markets will drift down further, because last week Chinese markets were down, were closed uh, due to the coronavirus, and because of these events that are taking, geopolitical events that are taking place, everybody anticipating Chinese markets will further come down. Anticipating the downfall in the market, Chinese government proactively acted and they pumped in $75 billion into the markets to ease the liquidity conditions. And of course, Indian markets also was about to follow the suit, but one good news triggered the market on Monday morning. That is the PMI index, that is Purchase Manager Index. Normally, Purchase Manager Index indicates the future activity or how the companies are preparing for the future growth of the economy, or how to meet the future demand, how they are building up the inventories or increasing the capacities, is indicated by the index by name PMI index, that is Purchase Manager Index. For January month, the Purchase Manager Index, it hit the 8-year high. It's very positive indication for the equity markets are concerned. As we always come across the GDP growth rate, we always track GDP growth is the past growth. It was the it's a, I can say it is just like a uh, measuring the growth of the past. But whereas the PMI try to give the indication how the future growth will pan out in the days to come. So once the Purchase Manager Index hit an all-time high, I can say it is 8-year high. That given a lot of comfort to the market, and markets were in a positive territory that day. And in the initial stage, as the budget draft was upfront outright disappointing to the market, but as the as the as the time unfolded, and as the time passed on, the analyst community as well as the economists upfront, even though the budgets looks to be very lukewarm, people outright said it is very disappointing. But as they analyzed the report, it given some positive indications to the economy as a whole also. The major trigger for the budget is how the government trying to balance the current account deficit and the infrastructure spending is concerned. There are some positivities there in the budget. It is by and large a balanced budget. Of course, market have some amount of anticipation in terms of the LTCC tax and reduction in STT. There are a bunch of anticipations. Market was expectation from the budget, but the finance minister have not addressed all these things. Right now, one uh, indication that is coming from the finance ministry and from the government is, right now when we observe at WealthMill Securities, what we analyze from the budget is, even though the expectations, the pent up expectations were very high in terms on budget of late from past 3 years, it have become a non-event, even though the media, the electronic news, newspapers, everything, the social media, everything says, uh, uh, even though they try to portray it as a big event, but slowly the budget have becoming a non-event kind of setup for the equity markets are concerned. I'll tell you why. The budget is a document submitted, draft submitted by the government earlier for the accounts of the government and the policy measures, and also some incentives given to the industry. Earlier in the budget, the finance minister is to give incentives or policy measure towards the direct taxes, which is income tax, which cannot be transferable, as well as the indirect taxes. Now the GST is in focus. GST, after passing the GST Act in India, the indirect taxes are moved to the GST Council. Now GST Council meets for every 3 months, and they takes uh, the measures and increase or decrease in indirect taxes in terms of the which will influence major part of the economy through the GST Council. So the GST Council, which meets on every uh, quarter, that event becomes major important towards the economy is concerned. Whereas the budget have become a slowly become a non-eventful. The reason is it is only with respect to the direct taxes and some other budgetary allocations and some funding is concerned. And also what government have indicated is, apart from the budgetary, we will take certain measures, okay, as and when we progresses. Last time we know, before the budget itself, the government have reduced the corporate tax with a ordinance. So as and when it required, the government is in a position to give certain important incentives to the government, to the industry. Government may announce the scrappage for policy. They may not announce it in the budget, but as and when it needed to the economy, they are going to announce. So why the market went in a positive territory last week, if you see, the first is the PMI index, the positive PMI index, and the second event is yesterday's monetary policy, RBI's monetary policy. In the beginning, uh, uh, everyone's expectation is RBI going to maintain a status quo in terms of the all key monetary parameters are concerned. It can be CRR or repo, reverse repo rate. Of course, the outcome also yesterday's monetary policy, they maintain status quo in terms of the all key monetary indicators were concerned. But RBI taken certain good measures in terms of the LTRO, that is long term repo rate is concerned, which gives a lot of liquidity into the economy. And also they taken certain measures with respect to the real estate sector, MSME sector, and also to release the liquidity into the economy is concerned. So it gives a double bonanza to the market. One is PMI, and second one is the flushing of liquidity that's coming into the economy. That boosted the markets to be in a positive territory. This is the main reason the markets witnessed a positive rise in the market last whole week. Today, being a Friday, of course, after rising a steep rise in the market, we can expect certain amount of profit booking in the market. But my our request to all our investors at WealthMills Securities, stay with quality and stay with the good quality stocks which are there in your portfolio. I just want to mention our observation. Uh, Most of our investors have this stock in their portfolio, that is uh, Schneider Electric Infra. Of course, in the budget, nearly government have allocated 1 lakh crores allocation towards the infrastructure spend is concerned, and government have also emphasized increasing the number of smart cities in India. So one of the key beneficiary about these events is Schneider, and we have been our clients have been buying and holding their in their portfolio. The stock was at 60 rupees last, I can say last almost all uh, 6 months. It was hovering around 60 to 80 rupees range, and it touched 10-15 days back also. It was available at a 60 rupees range. And this company, there is a turnaround story, and the company profits increased from uh, a loss to, it went to 30 crores profit. And last 4 days, 3 days, the stock went up nearly 50%. It went up nearly 50%, from 65 rupees range to it is above 100 now, at 110 rupees. So the point we try to make is, when you hold a quality stocks, probably in terms of the business, they might be witnessing some challenging times because of the the economic cycle, or because of the debt cycle. uh, the company might be going through a challenging time. But when a quality company goes through the challenging time, it gives an opportunity to the investors to accumulate. It's not a recommendation now. Okay, uh, if you want to add further, just give a call to us, and write a mail on corporate@wealthmills.in. We will tell you what is the strategy that's needed to your portfolio, because it depends upon your investment horizon, what price you entered, and what price you need to average that particular stock. So what, it is just a classic case study. What a large cap, for example, the Reliance Industries, last 10 years, it given three times return, last 10 years. Our last 2 years, a classic large cap stocks are went up by 10 to 15%, whereas this kind of quality mid and small cap stocks, okay, it just delivered within 4 days time. It given a very positive breakout to the portfolios. So whenever a stock which you hold in your portfolio comes down, don't be disappointed. Just analyze, and if the fundamentals are strong, try to go and buy this stock. This is the strategy we advise all our investors uh, to do. So just we'll be sharing all your portfolios. Just review that, and whenever a quality stocks comes down, try to pick up. This is how the wealth can be created. Uh, this is all with me for this week. Just this is the thought I want to share it with you. When a quality stocks comes down, go and grab it. Thank you. I wish you all the best. God bless you. Thank you.